And now we have live stream about Federal Reserve System meeting. Especially I will comment press conference. Jerom Powell now holding press conference live right now. Dow Jones going negative zone 1%. I will switch on my desktop. You can see Bloomberg right now. Look, Jerom Powell's talking. 1 minute. I will add some.
We think what matters for inflation.
Jerom Powell says that this was a talking about meeting. Okay, I don't know what that means. This was talking about meeting. Dow Jones going negative zone 1%, S&P 0.9%. Thank you. I just closed my position yesterday. I just hedged my position yesterday because look, US 10-year Treasuries yield is 1.57. 1.57. Okay, it's too much. It's new high probably. No. New high is 1.7. It's not new high. Anyway, they decided to make two consecutive or not consecutive rate increasing in 2023. Okay, probably. Okay, Powell says long-term expectations are what matter for inflation. Look, again and again, Federal Reserve says that we don't care about current inflation numbers. It's transitory. We believe that in some periods, just in 2 quarters, 3 quarters, I don't know, inflation will be over. We will have lower inflation. This inflation has special factors, special reasons because of pandemic, because of, as you know, so many commodities higher, oil higher. It's also because of pandemic, partially. How to say this? Even auto parts, cars prices higher, record high because of chips. There is some deficit on a chip market, and that's why we have higher prices for cars. You know, let's check the commodities. I can show you commodities prices. Just look, Finviz. I'm opening Finviz. Okay, futures, lumber. Let's check lumber. Okay, forget about coffee. Lumber just reached all-time high probably on weekly. Where is weekly? Lumber bonds. There is no weekly, just one chart. Okay, just reached all-time highs here, $1,700. So cotton also on highs. Energy, look, energy, crude oil, higher. Okay, so that's why I think it's not about core inflation. It's about commodity inflation. It's about inflation for special goods and special products. Okay, let's go back to Bloomberg. Let's comment this longer term price. Okay, new comments. Inflation expectations are well anchored in good place. Okay, actually good comment for the markets. Look again, intraday dollar index higher. Why dollar higher when they are expecting interest rate increasing? Because dollar index and dollar especially reflects future interest rates. If in dollar zone you have 3% and in UK on pound you have just 1%, more capitals, more flows, not capital, more flows will go to the United Kingdom, and that's why higher rates brings more money, attained more money, and that's why this currency going higher. Higher rates, higher currency. Okay. The same for treasury yields. If rates will be higher in the future, markets now selling their bonds because no matter to keep your 1% bond if next year they will print issue not print issue 2% bond. That's why yields reflects future expectation of rates. Yield on treasuries expect next year 2023 expectations for yield for rates. Okay, we'll assess progress beginning at next meeting. I don't know what progress about what. As I understand, now they are just talking, okay? They are just doing nothing as expected. Personally, by me, I expected that Federal Reserve will do nothing very serious because markets are afraid. Markets are, crucial about what they will do. That's why now they're just talking, they're just doing something, and probably in the future they will do something, some decision. Another thing, imagine you are Fed Reserve, okay? Your decisions is about 6-12 months. So if you are deciding to do something right now, it will reflect it on economy, not now, in 6 months minimum. So why you should do right now something very serious? Anyway, you can't stop. It's impossible to stop inflation. It's impossible to stop price change. So inflation, something very, very, how to say, isolated from Federal Reserve decision right now. Inflation will occur, inflation will exist, and this decisions is about future. If Federal Reserve now not active but very, very, very accurate, very, very, oh look, so many people on Zoom here. It's not traditional press conference like before they used to do before. It's Zoom, and look, this is journalist, analyst, they're talking about something, asking questions. Again, FOMC's focus is the state of the economy. What does it mean? Means that Federal Reserve System will talk about economy, will do something for economy, not for markets, because most people think that they should regulate markets, they should do something to S&P going higher, for bond market going down. No. Federal Reserve here, because they are regulators for economy, for monetary policy, for rates, for quantitative easing, not for markets, not for currency rates. How much is dollar actually for Federal Reserve? It's not it's not the most important. It's actually not important. They are doing everything to keep first unemployment rate low, and second, to keep inflation lower. So if we have recession, they're doing everything to stimulate economy. If we have inflation, they have to stop this inflation by increasing rates, doing some quantitative easing, by increasing bank reserves. By the way, I will hold some webinar in the future about monetary policy. What is monetary policy? How they regulate it? Because now I can see a lot of young people, they don't understand what is monetary policy. They don't understand what's the central banks, why we need it. They think that Bitcoin will be the future, blah, blah, blah. It's absolutely stupidity. It's absolutely stupidity. Financial system, more complicated, more comprehensive than you can think about it. Okay? So that's why it's so important what central banks, especially particularly Federal Reserve System, do. Okay, another, tapering start will be orderly, methodical. I just missed. Okay, another one, want to give a lot of notice on balance sheet change. What is balance sheet change? I will explain you. Look, Federal Reserve, let's move to screen. Okay, let's move to screen, and now you can see me. Okay, Federal Reserve has a balance sheet. They can keep on this balance sheet what? They can keep money, cash, or bonds. If we need more money for our economy, they are buying these bonds and sending cash to the banks. They're buying bonds and changing, converting these bonds to money. Banks get this money and invest. So when Federal Reserve attract more bonds, their budget going higher. Paper budget, let's call it paper budget, okay? So now they have $8 trillion, $8 trillion on their budget, on their this paper budget, because they attracted, bought more, and now it's high, record high. Never before they had a balance sheet like this, and never before we had COVID, never before we had recession like this. That's why 1 minute. That's why it's absolutely okay, it's absolutely normal that Federal Reserve System takes more paper from a market, increase the balance sheet, and not budget. I said before budget? No, balance sheet. Increase their balance sheet and push more money to the economy, more flows. This money should work in the banks like loans for the businesses. Federal Reserve System, they don't need cash on balance sheet of banks. They don't need cash on their own balance sheet. Their purpose to bring money when we need it and take this money when economy is overheated, if we have inflation, okay? So let's check another 1 minute. Yeah, look, market's still here. This is SPY S&P 500 ETF. So 4,216 is S&P, and we are just a little bit lower than previous close. We're a little bit lower than before this meeting. The market not crashed, just down 1% because of this decision. Just 1 hour ago they made some decision, and market not so much crashed, but a little bit down. So I will move to our YouTube stream, not my stream, Jerom Powell's press conference. Reverse repo facility is doing its job. Maybe you don't know what's reverse repo facility. If banking system needs money, they can give their papers and take some loans from central bank. We call it repo, repurchase agreement. Repo is repurchase agreement. So some year ago or some month ago, it was in April 2020, they decided to implement this repo market, and as Powell said, it was okay, absolutely okay, and did their job. Reverse repo facility providing floor on money market rates. Okay, as I said before. So now we have online some 6 guys. Thank you guys. You can write comments. I don't know, is it possible to write comments? You can write here. Also, please like my stream. I promise you today some special stream. I am not inside with my monitors, with my desktop, with my Bloomberg. So that's why I'm here with Bloomberg on YouTube, because it's hot and you can observe, you can see my view. It's Spain. I am in Spain. I live here in Spain. This is Benidorm city, not city actually, small town. And actually this the highest level penthouse. We can see some birds flying here, and view absolutely here some sea, some mountains, and birds. Okay guys, you can add some like to my you can subscribe and add some likes. Thank you to everybody. Let's go back to Bloomberg. Reverse repo facility providing floor. Okay, nothing new. Oh, 1 minute. Advertisement came here. 1 minute. We should miss some wind is here. It was absolutely comfortable, but now probably wind is a little bit. I will move my mic. Okay. Again, he says, look, he says no one number indicator to assess employment. Okay, good. This is neutral, nothing to do. Look, 2,700 people watching Bloomberg here in YouTube. Okay. Now we have some 10 minutes probably. And Jerom Powell will stop his meeting. And this wind, can you wait some 15 minutes? Hey, wind. I don't know, just wait. Powell will finish his press conference and then you can start. Anyway, at 32nd floor, anyway, you have some wind because it's too high. Okay, retirement effect should wear off a few years. Yeah, nothing important, nothing special, you know. Let's go back to our markets. Look, markets going higher. Look, we are reaching the previous levels. We're going back to 4,220, 25, 23. Now it's 22. Okay, so Powell stabilizing the market. He's talking about good things. He's very confident, and that's why probably markets going back from two bottoms. Markets going back, and actually it's good news. Yesterday I closed 30%, from 30 to 40% all of my positions, and it's right decision. Because nobody knows what will happen. Nobody knows what traders will do. Now markets back. Look at the daily. Look. Oh my God, we are on a top. We're close to highs. The historic, all-time high was 425. It means 4,250. But now we are just less than 1% below all-time highs. Okay, I think it's good news for traders, for bulls, because no panic, absolutely no panic here. Probably we were some little bit volatility. We had some volatility before at the starting of this conference, or over before, right after the decision. But now going back. Economy flexible. Labor supply demand crunch will clear. Okay, it's good. Economy flexible. I think, yeah, economy becomes more flexible. But this COVID recession, COVID-related recession, is too bad, because it's changing balance of economy. Oh my God, wind. So see strong labor market pretty quickly. Good news for bulls again. Strong labor market means 4% or less. Now we have 5.8, and Jerom Powell promised that soon we will have strong labor market and we'll go to full employment. GDP will grow at a higher capacity, and it's good news. So no need to increase rates. It means and probably I will have no even shock if we will reach all-time highs tomorrow or day after tomorrow. Okay guys, I'm closing my stream. Yeah, this press conference still continue, but I think he said everything he is going. He probably after the decision, after the most important thesis, most important words, there is nothing very important. I think strong labor market, rates will be higher in 2023, and that's all. It's the 90% of what we have to know about this decision, about this press conference. And thank you for subscribing. Thank you for likes. You can subscribe my channel. I promise you, every Wednesday we will have some live stream, live webinar. Every Wednesday the same time or a little bit earlier, I will hold this stream and will explain you what's happening on the market. We'll show you my portfolio. We'll discuss macroeconomy, my neutral position. As you know, this channel calls trading neutral channel. Why trading neutral? Because I trade neutral strategies without guessing. So I will explain every Wednesday what I am doing and why this strategy is market neutral with lower risks than normal. Okay, thank you guys. See you soon. See you next Wednesday, the same time. And you can subscribe and like this video if you like it. Thank you. Bye bye.